Hi there, welcome to Kneppy Invest. In today's video, we're going to be looking at a company called Aroa Biosurgery, their June quarter, the first quarter of financial year 23. This is a New Zealand-based company, and so they have a little bit of a different reporting season or financial year than Australian-based companies, and the June quarter tends to be their first quarter of the financial year. Most Australian companies, the June quarter is the last quarter of the financial year. Now, I do like Aroa Biosurgeries, and this is the second time I've done a video on this company. I did an introduction to this company back in December. Now, the reason I did that introduction video was because Aroa Biosurgeries listed on the ASX about 2 years ago, and they're in the space I do like. I really like these healthcare pharmaceutical companies. They actually are selling a product and are about to reach a very important inflection point. That important inflection point is becoming profitable, and I think Aroa is almost about to get to that point. Now, you do have to pay a little bit of premium for this company. Their market cap is just under $300 million at this point in time. So the market does like the future of Aroa Biosurgeries, just like I do. But I think if they can achieve becoming operating cash flow positive, profitable on a consistent basis, we'll see the market become more interested in this company, particularly if they can continue growing like they have done since they listed on the ASX. Now, there's another reason I really like these sort of companies, and that is just around the fact of what these companies do and why I'm really interested in the healthcare space, particularly those sort of healthcare companies that are adding benefit to humanity. And Aroa Biosurgeries is exactly one of those sort of companies. So let's have a look at exactly what Aroa Biosurgeries does. Aroa Biosurgery is a soft tissue regeneration company that develops, manufactures, and distributes medical and surgical products to improve healing in complex wounds and soft tissue reconstruction. They have a few products out there. Endoform was their first product. They gained FDA clearance back in 2013. So this company has been selling products for almost 9 years. So Endoform, antimicrobial, and Endoform natural. They deal with diabetic foot ulcers, venous ulcers, pressure ulcers, and chronic wounds. And then we get into Myriad Matrix and Myriad Morcells. They deal with trauma, tumor removal, general surgery, inflammatory skin disease. And another product they also have is Reinforced Bioscaffolds. If I remember correctly, Reinforced Bioscaffolds was developed in collaboration with Telebio and was cleared for FDA in December 2014. So a lot of stuff going on for this company, and that's one of the reasons I like Aroa Biosurgeries is just they do have a lot in the pipeline, a lot of products they are selling, and I do see significant growth in this company for the long term. And we have seen that significant growth over the past 6 quarters since they listed on the ASX. Now, I've already talked about what Aroa Biosurgeries does, but here are a few other facts in regards to the company. Now, Aroa Biosurgeries, and probably could tell by the name, this is a New Zealand-based company founded in 2008 by Brian Ward, and the company listed on the ASX on the 24th of July 2020. I'm pretty sure this is also listed on the New Zealand Stock Exchange as well. So it's actually just had its 2-year anniversary on the ASX. The CEO and founder is Brian Ward, and he's also the largest shareholder in the company with a 9.7% stake in the company. So definitely a bit of skin in the game there, and that's exactly what you want to see. A lot of people, a lot of investors actually do like to see skin in the game, and that is one of the most important aspects they do look for a potential investment. Market cap of Aroa Biosurgeries right now is at 293 million. That's at a share price of 86 cents. So again, you do have to pay a little bit of a premium for the potential of this company, particularly because this company is not yet profitable, but I do think they are heading in that direction, and it wouldn't be surprised to see Aroa Biosurgeries becoming profitable within the next few years. And the ticker code for the company is ARX. Now let's have a look at the June quarter results for Aroa Biosurgeries. Now just remember, this is a New Zealand-based company, so they have a little bit of a different reporting season than Australian-based companies, and the June quarter tends to be, for most New Zealand-based companies, the first quarter of the financial year. So just remember that for Australian-based companies, the June quarter is the last quarter of the financial year. So let's go back 1 year ago to look at the June quarter or the first quarter for financial year 22, just to see how this company And I want to see how this company has progressed over the years. So that's why I go back 1 year ago, and then we'll have a look at the most recent quarter in the next slide. So 1 year ago, receipts to customers $5.3 million, and the company was operating cash flow negative by $2.7 million. Had a lot of cash on hand. So at the end of this quarter, they had $31.4 million of cash on hand. They don't spend a lot of money in investing and financing activities, but they did spend $910,000 on capital expenditure. So let's have a look at the first quarter of financial year 23, just to see how this company has progressed over the past year. And things are progressing really well for Aroa Biosurgeries based off this quarter compared to the June quarter 1 year ago. Cash receipts up $8.6 million to $13.9 million. Now, there was a significant increase in receipts from the previous quarter, so the March quarter, and the company did address that in the commentary of the Appendix 4C, and this is a direct quote in addressing the significant increase in receipts from the previous quarter. This increase primarily reflects the timing of Ovitech's product revenues during the prior quarter and the subsequent cash receipts during the quarter. So just keep in mind, sometimes when you do see a significant drop or significant rise in receipts from the previous quarter, it's just about the timing of the collection in receipts. But let's just focus on this particular quarter for Aroa Biosurgeries. Receipts up to $13.9 million, up $8.6 million. The next thing we have to check is, what about the increase in spending? Some companies, even when they have a significant increase in receipts, will actually increase their spending by more than the increase in receipts. Is that true for Aroa Biosurgeries? Product manufacturing and operating costs up $700,000. Advertising marketing costs up $700,000. Staff costs up $3.5 million, and administration costs up $600,000. They also increased the spending on research and development, but overall, the spending had not increased as much as the cash receipts, and that meant the company was almost operating cash flow positive. We might say they were operating cash flow neutral, only burning through $205,000 of cash in operations. The other thing you also got to take into account is the spending in investing in financing activities, and the company did spend $1.1 million in capital expenditure, so they're not close to being free cash flow positive just yet. Looks like they also did a significant capital raising during the past year because cash on hand has increased from 1 year ago. At the end of this quarter, they had $55.4 million of cash, debt-free, and that means the enterprise value is actually closer to $200 million than $300 million. So with the enterprise value, you just take the market cap, which was $293 million, and decrease the cash on hand and actually add back any debt. So if you do that, we get an enterprise value of around about $240 million. Now to the receipts history for Aroa, and we have 8 quarters of history. I've mentioned this in other videos before. I do prefer at least 8 quarters of history, 2 years of history, before I really can determine whether there's any trend in receipts. And there is definitely a trend in receipts for this company. The receipts are going up through time. In fact, they've increased from $4.5 million in that first quarter, September quarter 2020, up to $13.9 million. So receipts have actually tripled over the past 2 years. Now, receipts are not going up in a straight line. There is a little bit of a lumpiness. So you never, if you do see a decrease in receipts from one quarter to the next, that is not the makings of a new trend. That's just the lumpiness we do see. But the main thing here is, during the history, this company has been on the ASX, receipts have been growing, and that is one thing I definitely look for in relation to an investable company. Now onto the chart for Aroa Biosurgery, and this is not the updated chart. This is just the chart when I did that introduction to this company in December 2021. And at that point in time, the share price for Aroa Biosurgeries was trading in this channel. And in fact, it had been trading in this channel for almost 1 year. Share price was trading between about $1 and $1.25, and the share price was trending towards the lower end of that channel. I was thinking at that point in time, maybe a good buying price, if you really like the future of this company, was around $1 if $1 could hold. So let's have a look to see if $1 did hold, and if it didn't, that would be a negativity or negative thing for this company moving forward in the short term, not the long term, but only in the short term. And here is the updated chart for Aroa Biosurgeries. And just after I did that video back in December, the share price of the company fell through $1, fell through that support level, fell through the bottom of that trading range. You can just see how quickly the share price fell from then. So this is just a technical signal, and there would have been a few traders who saw this signal, and that's why the share price collapsed quite significantly after it fell through that support level. You see this time and time again, and that's why support levels are very important. Resistance levels are very important as well. In fact, the share price fell from $1 all the way down to just above 60 cents in about 3 months of trading. But it looks like 60 cents has held quite firm. In fact, I'll probably say 62.5 cents is a really good support level right now. And there's also the potential that now the shares of Aroa Biosurgeries will be trading in a channel between about 62.5 cents and we'll say about $1 or so. We have seen the share price trend up over the past few weeks, we'll say past month or so. Looks like share price is now turning back down. So at this point in time, I do like the future, particularly the long-term future of Aroa Biosurgeries. But if we do see some really positive financial data coming out of this company, if they can become operating cash flow positive on a consistent basis, I think there is that potential. We'll see the share price of this company move into an uptrend, and that would be the time to take a pretty good position in this company. So at the moment, I have put Aroa Biosurgeries onto my watch list, near the top of my watch list. I'm just going to be following the share price and the movement and the sentiment in this company quite closely over the next few months, potentially over the next few years. That's all I have for this video, looking at Aroa Biosurgeries' first quarter for the financial year 23. If you have any thoughts, any concerns, any questions about this company, just leave in the comment section of this video. And otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.